Aurora Cannabis released their Q4 earnings and they are trending in the right direction, but they definitely missed some targets. Let's take a look at some of the key info as provided by their executive team. This quarter does close out the fiscal year, but with these growth stocks, the only thing that matters is the most recent quarter. Net revenue is up 61% quarter to quarter to 99 million. If you've been following Aurora, they provided guidance just a month ago in early August of between 100 million and 107 million for this quarter. That quarter ended June 30th, so that's over a month after that they released this guidance. They didn't have to provide that guidance, but they chose to, and they missed it. Before then, in the Q3 conference call, they didn't have to say that they would hit positive adjusted earnings. They did not update that in August when they provided the revenue guidance, and now we see they hit an adjusted loss of $11 million. In the Q4 conference call, they generally blame the slow opening of retail stores for their lower earnings, and they blame the lack of visibility and communication with their non-cannabis revenue side of the company for the revenue miss. Those who know Afria know that they just announced a quarterly profit, so the stakes are getting higher for these marijuana companies to get positive earnings. All that being said, the quarter had huge revenue, the highest thus far of any Canadian cannabis company, and it proves that there really is a huge market and it's growing at a high rate. Taking a look at the balance sheet, the cash on hand and the assets look healthy enough until you get down to the goodwill. It's sitting at just over $3 billion, which is well over half of the company's total assets. They're basically telling us that they overpaid for their huge string of acquisitions. The price to book value for these growth companies is already skewed, and it just got skewier. The cost to produce per gram came down to $1.14, which is great and is one of the best in the industry, if not the best. Production volume's up, medical patients are up, medical revenue's up. Everything seems to be trending in a great direction. However, with a growth stock that's already inflated, missing targets brings that stock down. So if we look at the stock, it's dropped down a fair bit after earnings release. Things are trending in a good direction. The revenues are getting large enough to confirm the market is viable. And Aurora actually made it through the quarter without having any scandals, which is great for the industry. Maybe next quarter will show positive earnings.